Welcome back. You're watching Stock Watch, and joining me to unpack your stock-related questions this afternoon is Odwa Magwentshu from Trive Investments. Start sending your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, Odwa. Quite an interesting week. I don't know. We've still had gains in the US, but it seems it wasn't firing on as much as it had over the last couple of weeks where we had record highs. But then the JSE also really bumbling along. But quite interestingly, the strength that we have seen in the rand, now just over 18 rand 60 against the US dollar. What have you made of trading this week?
When it comes to trading this week, as you said, it was very good for the local markets. We did see some good performance that side. The resources sector coming to the play for finally for quite some time. The platinum miners that being. So, I mean, that was mainly due to the palladium price increasing on its side. If we look at then the rand against the dollar, luckily for us, the dollar has been weakening as, anticipation of interest rates in the US continue to be on top of investors' minds. So a lot of investors are looking at, interest rates to start dropping. And the anticipation, I believe, was the reason behind the rally over the past few weeks in the US. However, now I think that all investors have finally put their cards into different play. But also we did see the Magnificent Seven now being looked at as the Fantastic Four, as we're finding some of the heavy hitters are falling off, Tesla being a big example.
From Magnificent Seven to the Fantastic Four, I wonder if we're going to have a cut in the granolas in Europe. As we're talking about, there's a question here. A basket with some big seven and then semiconductors, of course, the Magnificent Seven. Also, CrowdStrike, tech cybersecurity type assets. They've all grown hugely. Do I hold or take a percentage of profit and spread into YUM and other classes? I'm actually thinking the reason why you're, saying that it's now been cut down from the Magnificent Seven to the Fantastic Four, could it be that, investors are finally taking profits in some of those counters?
Most definitely, that's one thing that could indicate it. However, if you look at something like Tesla, unfortunately on that front, it's been more of competition increasing. They're not, expanding as much. BYD took over as the EV brand of choice in China, and other. I mean, everyone now is coming on board in terms of EV cars, your Fords, etc. Now they're starting to push their EV cars. So Tesla is struggling on that front. In other brands as well, I do think, though, however, in the other companies, there could be a mixture of profit taking, as I mean, nothing runs forever.
Yeah.
So as long as you've got some profit and you still have a substantial holding in that investment, at least you won't lose out if you have another 200% here again. But you must consider that nothing goes on forever. So taking some profits is never a wrong thing.
Yeah. Well, quite interesting that the viewer also says, do I take profit and spread into YUM and other classes? So, of course, I would imagine that this is kind of a growth versus value debate. Would you be taking some of your profits from growth into these value long-standing asset classes?
Me personally, yes, that's what I would do. I think it's also not to concentrate your investments as well. You don't want to be all in growth. And we in the past 3 years, I would have to say at least, there's been so many surprises that we've seen. We've seen COVID, we've seen high inflation rates. Now we're seeing a high interest rates environment. So you do want to, diversify your holdings to a degree and value. It makes sense to also have some value shares if you have a portfolio focused on growth at the moment.
All right. Well, let's get to some more questions. There is a question on City Lodge. South African hospitality. Can you tell me if City Lodge may still be a takeover target? Do you expect anything relating on the share? Let's actually tackle that one. Is City
Okay.
Lodge, ripe for, being a takeover target at this point?
Uh, it's something you should consider. I think it's worth considering. In terms of takeover, I think the players that may take over are not focused there as much. We did see with Sun International taking over. The owners of Emperor's Palace.
Yes.
So I mean, we are seeing, a trend where now the bigger guys are coming in and taking over established but not doing too well businesses. So there is potential. However, there hasn't been, or I haven't personally heard of anything suggesting that there are people looking to take over
Yeah.
City Lodge. Mm.
Well, actually, just on that, you have, Sun International taking over Piermont, the owner of Emperor's Palace. But then you're also seeing in that space, the online gaming really being the big performer there. And I'm wondering, what's the rationale behind taking over the owner of, Emperor's Palace, which is your traditional casinos, where that has seen some pressure on consumer demand.
Mm. I mean, as you say, I think it's also a lot more people are now jumping into gambling or betting.
Yeah.
So that's why and online is the quickest access you can get to it. So I think that is what's also assisting the online business. If you're looking at your traditional gambling spots, I do think even though they're not performing as much right now, obviously
Yeah.
the economic environment is not too happy with you. It's not conducive for you to participate. However, what is interesting to see is that people would still love going to the casinos. Still, there's a difference or a feel of the experience of being at a casino, and I believe, I mean, if things do turn well for the country, it could that business could still show some value. I don't think it's totally out of the it's
Yeah.
it's a dead economy or a dead business. I
Yeah.
just think it's tough times right now.
Yeah. Well, actually, just going back to City Lodge, because I mean, that share doesn't really seem to move too much, even though we do get good results coming out of that company. They've also been, buffing up their strategy where they're more diversified in terms of they're not just a business travel counter now, where they're more leisure and boosting their food and beverage offering. Why actually hasn't that share been moving too much?
I think it could be a bit of fear around the accommodation sector. Despite we've seen a lot of uptick. If you look at stats, it says numbers amongst traveling and everything in tourism in South Africa. So I don't know. I think maybe perhaps, as you rightfully say, is that investors are not looking there at the moment. Property is still in a troubling space. So it's not really the most attractive thing to invest in right now.
All right. Well, let's get to Grindrod Shipping. Would appreciate the view on the investment case for Grindrod Shipping. So, of course, a lot of people talking about Grindrod, but not much on Grindrod Shipping. What is your view of that counter?
Grindrod Shipping, is derived from Grindrod, of course. They also, I believe, work a lot in Singapore. However, when it comes to the business itself, I mean, they did release results not too long ago. And the results were not too bad, to say the least. An investment case, I think it's the case right now is more if you're looking at Grindrod as they are positioned properly. Shipping right now, there's a lot of backlog internationally, and obviously you want to also include what's happening in the Red Sea. When it comes to shipping, if you're not, I think that Grindrod was just well positioned, whereas Grindrod Shipping is not as much.
Well, actually, just talking about shipping and, of course, what's happening on the Red Sea, would, because obviously there's the cost implication of all the supply constraints on the Suez Canal, would that not benefit Grindrod Shipping if those prices do go up, just like how we saw during COVID?
I think so, yes. In terms of the need, they might
Yeah.
get more demand for the business, and that could be the potential investment case for the counter. However, I mean, looking at the results, even though they were not too bad, they were good
Mm.
results. They that still hasn't materialized as yet in
Ah.
terms of them getting that business. So we just need to see how things play out. Potentially, there is potential that they could benefit from
Mm.
what's happening. However, it doesn't seem to be the case right now from their latest results.
All right. Well, talking about something that has not materialized, the value unlock on Brait. There's a question here. Is there actually ever going to be any value unlock in Brait? As far as I know, there were three businesses: Premier, New Look in the UK, and also Virgin Active. Obviously, unbundled Premier, we have that separate listing now. But in terms of Virgin Active, because there's been, this narrative that they could switch their listing and list Virgin Active. But I don't know, is that going anywhere at this point?
At this point, I don't see much growth when it comes to the counter itself. Virgin Active is a very seasonal business. It's usually around the January, February portion of the year when you see high uh, uh, uptake of new business. So that is what was I think the unbundling of Premier has hurt Brait in the long term, and that's why there's even talks now of even unbundling Virgin Active to have it as a separate entity. As a whole, it doesn't seem like they have much, even in terms of value to show investors in the future.
Yeah, indeed. And quite interesting that you talk about the fact that new memberships only come in December, January, and people still have their New Year's resolutions. Yeah. And a lot of those disappear by February, March. So it's going to be quite interesting to see the trajectory of that business and demand, particularly with the consumers constrained like this. Also, another interesting, as we're talking about unbundlings, there's also been questions around Rainbow chicken that is being unbundled by RCL Foods. And really the question here is, would it be a good buy? And maybe when would someone enter right now, where you go in through RCL or wait for the listing?
Uh, when it comes to rainbow chicken, I think the chicken industry as a whole in the past year has had a very tough time
Yeah.
with the outbreak of the influenza, etc. So, but however, if you look at the Premier's last, I mean, sorry, or RCL's last results, they did show that they managed to get through that quite well by raising the prices according to about 12%, if I remember correctly. So to answer your question, is it now? Would you rather buy now or would you get in later? I think right now, if you have some shares, stay in, and if you want to raise your pot, maybe go a bit more. However, we still want to see a bit more information on the unbundling. What price are they going to bring it out at? Everything along those lines. Then only would I consider that side. However, cyclically, I think chicken or rainbow chicken in concentration right now it's quite tough. If you have it, maybe add more. But in terms of just going in for that alone, might be a risky thing to do right now.
All right. Talking about risks, it seems MultiChoice and Canal are in a bit of a risky situation there, of course, with all the regulators hovering over that deal as well. The question also has been, it's quite interesting because when Canal Plus came out with its first offer for MultiChoice, we did see that share price going to that level and even above. But now that they've come out with a revised offer of 125 Rand per share, it seems that that share price is not getting to that point. Do you think that they maybe could be further upside there or not?
I think there could be possible upside. Obviously, with regulation, it could take a very long time before the deal concludes. However, I mean, I think with MultiChoice's positioning, I mean, being one of the biggest broadcasters in Africa, that is a very promising thing for Swiss Canal for Canal Plus to look into as an opportunity. I think right now. Investors might be just worry in that the negotiation or the regulation part of this deal might take too long, and that's why maybe the share price is not jumping into there. Also, remember when the news first came out, that's it was the shock of that there is actually interest in this business, and I think people wanted to jump in as soon as possible to be able to get that. Benefit of a higher price. However, right now it does seem like the process could take a bit longer, and investors are not then rushing as they did previously.
All right. Well, Odwa, let us get to your stock pick for today. What are you hanging your hat on this Friday?
This Friday, I'm looking at Spur Group. I think that, I mean, the results were quite outstanding that they released to us, and also the business, I mean, has been faring very well. They've just added Doppio Zero to the mix. They do also have other great franchises that they own, and so the reason I think is that they've been weathering load shedding and also what we're going through as a country very well, and the business still seems to continue to grow. They've added also 12 restaurants as well in the last results, so I think Spur is a good buy for me right now.
All right. Well, thank you so much for your time and for your analysis today. Really appreciate it. That was Odwa Magwentshu from Trive Investments.